Lease, finance, or buy. What's actually the smarter move when getting your next car? The wrong choice can quietly drain your wallet thousands of dollars, while the right choice could keep your monthly budget balanced and your net worth growing. In this video, I'll walk you through each option, when it makes sense, and crown the best choice for most people. So let's get right into it. But before we do, I want to remind you that this is Empower Capital. I'm Sam, and remember, this content is for educational purposes only. This is not legal, tax, or financial advice. Make sure to do your own research with everything you hear. All right, let's rock and roll. So first up, leasing. What is leasing? You're basically renting the vehicle for about 2 to 4 years at a time. What are the pros of leasing? Lower monthly payments, and you're always driving a new car under warranty. You don't have to worry about all the other issues that come with owning a car. All right, the cons of that: you never own the car because it's not yours. Right? What's the other con? Age limits. Right? You go over, you get charged for the extra miles that you drive. So a lot of times you're limited 10 to 12,000 miles. And if you go over that, you get hit with the fee, right? So it's best for people who love new cars, want low payments, and don't drive long distances, as well as have good credit report as well. That's also very important. So imagine, let's say somebody called David, right? Commutes 20 minutes each way and loves switching cars every 3 years, right? Leasing will give him low payments and no resale hassle, all right? So that's the benefit there, assuming he has a good credit, okay? Now let's talk about, section number 2, which is financing. Let's talk about financing. What is financing, right? You take out a loan, you make payments, and own the car once it's paid off. That's financing. Okay. What are the pros of financing? You build equity. You will own the car. Okay. It's yours. You own it. All right. Freedom to customize it or drive unlimited miles, drive long distance, whatever you want to do. No limits there. Right. Eventually, no car payments after you've paid it off. What are the downside or cons to that? Right. Higher monthly payments than leasing. That's usually how the financing payments are set up. Okay. And you have to pay loan interest, right? That adds to the cost. Usually that interest can be, also based on your credit as well. Car depreciates quickly in the first year. Once you drive off the lot, the depreciation on vehicles are very high. So that's something else. And who's it best for? People who want ownership but can't pay the cash, right? Can't afford to pay it all off. It's good for those people who want to own it. Okay. And maybe they don't qualify for a lease as well, because sometimes leases have that limitation based on your credit and all that stuff as well, based on the cost and based on what country you live in, right? So example, let's say Daniel finances a $30,000 car over 5 years. Yes, that person will, let's say he will pays interest, but at the end of that period, he pays outright and keeps driving it payment free. All right, so that's great. And now let's talk about buying it outright. Number 3, what does that entail? All right, you pay full cash, no loan, no lease. You pay full cash. What are the pros of paying full cash? No monthly payments. All right, cheapest long-term option because you're paying less total cost, right? Because there's no lease fees, no interest costs. So at the end of the day, you're paying a lesser cost. All right, freedom to keep the car as long as you like. Right? What are the cons of that? Huge upfront cost, right? That's a major con. Ties up cash that could have been invested as well, right? So if you compare the amount of money you could have make with that cash relative to the interest you would pay in financing or leasing, right? You can sometimes compare whether it's good to just take that money and invest it versus going the other route. So still responsible for the maintenance after the warranty expires. So that's a headache, right? But it's best for people with strong savings account, no debt, and who want long-term value, right? It's best for them. So for example, let's say Kwame pays $25,000 cash for a reliable used car, right? And he keeps it for 8 years, and his cost per year ends up way lower than leasing or financing once they do the math, okay? So now let's talk about the verdict, right? This is what you're waiting for, right? So which one wins, right? I want to hear from you what you think is the best one, and I'll give you as well my outcome, right? What I think is best. So if you want low payments and a new car every few years, you go with leasing, right? So it's not one size fits all. This is customized, right? So if you want to own but spread the cost, all right, you go with financing. And if you want the cheapest overall option, then you go with buying with cash. My personal verdict: buying or financing a reliable used car wins. At the end of the day, 90% of the time. And this is the way Warren Buffett also buys his vehicle. As rich as he is, he buys used cars, right? Because of the depreciation that takes place after you drive off the lot. You know, the depreciation kills your wallet in those first 2 to 3 years. Leasing means you're always paying and never owning, right? The wealthiest people I've worked with rarely, right, lease unless they're dealing with a business situation. They either pay cash or finance smartly and keep the car for years, right? But I like the Warren Buffett approach because it's because of the depreciation aspect, right? So there you have it: lease, finance, or buy from an individual perspective, right? Each option fits different lifestyles. So I want to hear from you. I want to hear what you think, all right? Are you team lease? Are you team finance? Or are you team buy? Drop your answer in the comments below and I'll be responding to them as much as I can. And if you found this video helpful, make sure to hit the like, subscribe, and share it with your friend who's car shopping right now. See you in the next video. And also, if you're gonna car shop or you have car dealership friends, right, discuss this with them as well, right? Because I think they know the back end of what's going on as they deal with clients, right? So they may not share all that to you, but this is the back end side coming from an accountant myself, right? So I look at things from the back end and as well as from the perspective of the client, right? So I get to see both sides of the puzzle. So that's it for today. You know, make sure to look out there for the next video, which will focus on the perspective of a business, right? When you're dealing as a business and the write-off implications, this whole question, lease, buy, finance, changes, right? It's not the same based on how you're looking at it from the individual perspective versus from a business perspective because of the write-off or the ability to deduct or expense certain items, right? So that's it for today. Stay blessed. We love you. God bless you. And God loves you. And we're trying to empower you with knowledge so you can be financially free.